this is the hardest part about this situation, and this is the challenge with investing. Nobody's going to show up and save you, right? There is no saving you from that situation. The only person, my daughter's favorite saying is, the best rescue is a self-rescue.
You're listening to The Real Investment Show.
Investors typically get themselves in really bad positions because they do extremes, right? It's either all or none. In a lot of cases, like, oh my gosh, somebody said that, the recession's coming, so I'm all out the market, right? Or in this case, even worse, I'm going to short the market, double leveraged, short Qs because, I was told the market's going to crash any day now. Or it's just I'm all in the markets, right? And just disregard, kind of any risk protocol whatsoever. And the problem with that all leads to, bad outcomes in a variety of situations. But I want to talk specifically about this email because the email happens a lot. This isn't the first time that I've gotten an email like this. I've gotten over my career, going back to the .com crisis, going back to 2008. I've gotten lots of these emails over time. Back during the .com crisis, as an example, I just hadn't been working with Brent for very long at that point. Back on that station, got a call from a lady had gone $350,000 into credit card debt to invest in the markets in 1998, 1999. Of course, that all blew up in 1999. She was invested in all .com stocks, et cetera. So now she had, long margin in her account, had gotten blown out of all her positions because of the margin calls and had lost all that money. Now she's got $350,000 in credit card debt. What am I going to do? Those are the stories that you get over time. And we got some of those stories as recently as 2022 during the decline in 2022. Yeah, the market was only down 20%. There was a lot of stocks in the market, all the meme stocks, a lot of the the disruptor stocks and like the ARK innovation funds, those type of things. Those stocks were down 80, 90%. So a lot of investors lost just a ton of capital in that environment. So you get these emails, it's like, okay, I did this. And so this particular email was 2 years ago. I was listening to this YouTube channel. The guy says the market's going to crash and everybody's going to lose 50% of their money at least. And so I sold everything and I went double short the Qs. So here we are 2 years later. I've, lost half of my account, more than half of my account. What am I going to do? Right? Well, the first thing to do, and this is the hardest part about this situation, and this is the challenge with investing. Nobody's going to show up and save you, right? There is no saving you from that situation. The only person, my daughter's favorite saying is, the best rescue is a self-rescue. The first thing you've got to do is just accept that you made a mistake. This is the hardest part. It's kind of like breaking an addiction of anything. Just, you've got to accept that you've made a very bad investment decision. And it doesn't even have to be this. It doesn't have to be this dire. I mean, part of investing is just accepting that you made a bad investment decision. You bought something too high. You bought the wrong asset. Whatever it is, right, that's losing you money. Accept that you made a bad decision. It doesn't mean that you're a loser. It doesn't mean that you're stupid. It doesn't mean you're an idiot. It doesn't mean anything other than you just made a bad investment decision, right? It's like going to Vegas and betting on a weak hand and losing, right? Just you lost some money. Cut it short, right? But in this particular case, you've just got to accept that you've made a bad investment decision. You've lost money. Here's the most important lesson. The value you had was ethereal. It doesn't matter what the value of your account was a year ago or 5 years ago or 10 years ago. Doesn't matter. The only thing that matters is the value of your account today. And this is the hardest part for investors to come to grips with. One of the biggest mistakes that we see with clients and prospects and everybody that we meet with, they get attached to the high watermark of their portfolio. I mean, it's like, well, my portfolio was worth X 2 weeks ago, right? And now I'm losing money. No, you're not losing money. The markets are just gyrating, and the value of your account is going to go up and down with relative to the market. So we have to understand that. But there's nobody that's going to come in and get you back to whatever that mythical value was that you've anchored to now, right? That anchoring is one of our emotional mistakes that we make in investing, and that we've got to get away from that. So, how do you recover from this? Well, the first thing you do is you accept where you are. You sell everything. You go back to cash. Once you're back into cash, you can now reassess your situation. That's the hard part to do. And just saying, look, I've sold everything. I'm accepting the losses. This is where I am. There's nobody going to show up and bail me out tomorrow. There's no magical, I'm going to go hire some advisor and he's going to grow this back to where it was overnight. That's not going to happen. And the harder that you try to make it grow back to where it was, the more risk you're taking, the worse you're going to make the problem. So just stop everything. Just go to cash, take a breath, and then start over and begin a strong, disciplined investment process. And it's going to be a long road, but you can grow your way back to where you were. And we've seen it done in the past. But there's no quick fix for this, right, Danny?
No, there's no quick fix. And I think one of the things that we see often is that we get inundated with so much different information. And then there's people that we like and we follow, and they say, listen, here's what's going to happen. And then it doesn't. And so what I would encourage everybody to do is take a step back. If you're going to make an investment in whatever it may be in, even the smartest guys that are worth millions or billions of dollars, they don't go out and put everything they have into one theme or thesis. Mm-hmm. They say, what can I afford to lose? Right now, they're probably in a little bit different space than many of us, right? That they can go out and they could physically lose something and it would probably be okay. But yet they're a lot more conservative, where I feel like a lot of times people feel like they have to make up for lost time. Mm-hmm. Like you hear from people, hey, I'm about to retire. I haven't saved as much as I need to. I need to get super aggressive. And my conversation with them is always like, okay, well, great. Maybe we need to get more aggressive on saving than we do on, and cutting spending than we do on investing. And many people don't like that because that's a harder aspect of it. But think about it. And, it's even with short-term money. We have a lot of times we visit with people who say, I'm going to need this money in 2 years or 1 year. Let's go ahead and put it in the market.
No.
Like, no, not at all. Not if it's short-term, not if we know we're going to need it. Because is it life-changing if it goes up 10, 20%? Probably not. But if it goes down 10 or 20, now you have to pull from other resources. Now we're in trouble. And so if you're going out, and Peter on the YouTube channel, so if you're not on there, go to The Real Investment Show, subscribe, like, lots of great chat going and banter going on. But go and think about, what is the actual, you can't put everything in. Unless you have that crystal ball, and if you did, you probably wouldn't be in the situation that you feel like you have to do so.
Right.
So I think this is what is unique in this environment. There's so many experts. There's so much information.
There's too much.
And then we also, though, we let our emotional biases get the best of us. Mm-hmm. And we say, you know what, this is going to happen. Look at all the data. I mean, we do that internally. Don't think that we don't look at all the data and like, oh my goodness, at times. Mm-hmm. But we know what the market's doing. We know that all the different things that can occur. And it is a very challenging market over the last so many years. And we've talked about that. I mean, so many head fakes, so many ups and downs, lots of information coming out, new stimulus, new legislation. It's like trying to plan for taxes right now with distribution planning.
Right.
I'm like, guys, you know what? I would rather you distribute from a taxable account right now and then refill that bucket up at the end of the year, figure out exactly what's going on with this tax code before we do something, or even a Roth conversion, and you can't undo it later down the road. Just with so many unknowns, right? I mean, you have abolishing the IRS to, creating only the ERS. Then we have Scott Bessent just a week and a half ago said we're only going to the plan is to only tax income up to 100 after 150,000, right? So you get $150,000 in tax-free income. Mm-hmm. So many things, right? So we could say, hey, I really think this is going to happen. I'm going to do all this now, or you do a little bit at a time, or you wait and see. But from an investing, I mean, we hear these stories all the time, unfortunately.
As you talked about, there's so many sources of information out there right now. So I mean, you got your mainstream media, right? Fox Business, you got CNBC, you got Bloomberg Television, then you have a billion YouTube channels with everybody on there talking about whatever they're talking about. You've got all these articles that are published every day, financial news sites. I mean, there's just so much it's just information overload. And, it used to not be that way. I mean, we've talked about, back in the days where, you got the Wall Street Journal, it was chiseled in stone tablets, so it was just, it was really hard to deliver and read. But, that was about the only primary source of information that you had access to on a regular basis. And so things just moved a lot slower. And if you really wanted to know what was going on, you had to, get on a horse and go, ride down to the local, Wells Fargo office and talk to your broker, right? I'm being a little bit facetious, but you get my point. But now there's just so much immediacy of information, and it changes so rapidly that what you thought was true 5 minutes ago is not true 5 minutes later. And we've seen that just recently with the tariffs. It's like, Donald Trump just put a tariff on Venezuela, and then the market goes down.
And then tomorrow you wake up and the tariff is gone.
Then tariff's gone the next day.
Pushing it back.
Exactly.
Yeah.
And that's the problem. So now you sold everything. Now you got to go buy everything back in. That's the problem with this speed of information. That's why we have to, as investors, we need to slow things down a bit so we can process the information as it's coming in and then logically react in our portfolios to that information and what it potentially means for the only thing that matters, which is earnings. All the other narratives, forget that stuff. What does this mean for earnings? That's all that matters.